This is the Scrap Metal Commodities Recycling Report by BENLEE and Raleigh Goldsboro Recycling, October 24th, 2016. Last week, commodity prices were mixed and the U.S. dollar rose to a new 8-month high. U.S. steel production rose a bit, but remains well off the highs for the year, which is causing pressure for steel mill profitability, which has actually been good in recent months, due to higher prices allowed by tariffs and lower scrap steel prices. Oil prices were flat, ending at $50 a barrel, but up a big 9% in the past month, and has been above $45 a barrel for a number of months, which is a major positive for U.S. jobs. Oil rigs, which use major amounts of steel, rose to 443, up a huge 40% from the recent 316, but is down a staggering 72% from 2 years ago. Drillers are going back to work and more steel is being used, helping steel mill utilization, which will help stabilize scrap steel prices. Iron ore rose 3% for the week, ending Thursday at $58 a metric ton, which is now up 5% for the month and 14% for the year. This is putting pressure on steel mill profits and will support higher scrap steel prices in the weeks to come. U.S. scrap steel prices held steady, but export prices are up over $10 a gross ton. Therefore, U.S. scrap ferrous prices should be up next month due to export demand. Hot rolled coil steel shows steady here at $569 a metric ton, but multiple steel mills have announced a $30 per ton increase in recent days, which follows the $30 a ton increase on plate 2 weeks ago. Scrap steel 304 dropped a penny to 32.5 cents as demand remains just fair in a slow growth market. The U.S. dollar continued its rise and hit a new 8-month high, rising 3% for the week. This keeps downward pressure on commodity prices. It also hurts U.S. companies that export due to prices go up for their foreign customers, and it makes imports to the U.S. cheaper from other countries. Copper fell 2 cents, now falling 3 weeks in a row, with the U.S. dollar being a key reason for the decline. The 5-year copper inventory chart shows inventories are near almost 4-year highs. High inventories will keep pressure on prices, so copper should remain low for a while unless there are major events. Aluminum fell, ending at 73.2 cents, and again the U.S. dollar strength is a key reason. Aluminum inventory levels, while not up a lot, had their biggest increase in years. If it continues, this will keep downward pressure on prices. China's GDP grew at 6.7 for the quarter, the same as the previous 6 months. By historic levels, this is low, but it is among the highest growth rates in the world. U.S. industrial production increased 0.1% in September versus August. A bad performance, but if you look carefully at the chart, in the third quarter, July, August, September, manufacturing is up 1.8% for the quarter, which is the first quarterly increase in a year. So not a great set of numbers, but the best in a year. Jobless claims rose for the week, hitting a 5-week high at 260,000, but remain under the key growth mark of 300,000 for 85 weeks in a row, the longest streak since 1970, 46 years ago. Here is a new index to give all an idea of the status of the economy. I call it the Delta Index. Delta Airlines, that is. The Raleigh Airline Club that I have been a member of for about 8 years had a 26% rise in attendance in September over last September, a clear indicator of business growth, and also a great job by the manager Dave and his team. Well done. With that, we hope all have a safe and profitable week.